Got a question from Rebecca on today's episode. She says, I make too much to contribute to a Roth IRA. Is there anywhere else I can invest to give myself some tax advantages in the future? We'll ask financial advisor Frank Oliver coming up next. Well, Frank, another good question from one of our viewers and listeners. Rebecca sends this one in about that Roth IRA. Can't contribute to anymore. Good position to be in. Means she's making a lot of money, right?
Yeah, congratulations to you, Rebecca.
Yeah.
That's absolutely a good problem to have.
Yeah.
You don't make too much money to contribute to a Roth IRA.
But a problem nonetheless.
Yeah, it is. And you want to have some tax advantages in the future. So one thing that you can actually do, Rebecca, is that you can contribute to a 401k or a traditional IRA, and then you can convert that back out into a Roth.
Okay.
So that's one method to get money into a Roth IRA. If your income's exceeding that limitation, contribute to an IRA and then convert. You can do that.
Is this the Backdoor Roth IRA?
Yeah, it's one version of a Backdoor Roth IRA. The other one is if you can over contribute to a 401k, and then you're going to have not pre-tax contributions, but post-tax contributions to that 401k. Then you can take those post-tax contributions out and convert those into a Roth as well.
Okay.
So a couple different methods there.
Probably advise folks to get help with that strategies because you don't want to mess up.
You do not want to mess that up. Yeah,
that's not as straightforward as just the normal.
No, backdoor Roth conversions can get a little tricky from time to time, but a standard converting to an IRA and converting that back into a Roth is a strategy that's not overly complex, and we help people with that.
But you want to track it well and
you do want to
keep
track
documents and data and things like that.
You want to paper trail that. Yeah, you got to watch for the 5-year rules on the 5-year clock on the Roth IRAs and all of that. So depending on your age. I guess the other strategy, which we've covered several times, would be HSA account, Rebecca. So you do get a nice tax deduction today, and you do get tax-free benefits in the future for pulling it out for qualified medical expenses. So a couple ideas for you there.
Not everybody's got access to that, but if you do, Rebecca, that would definitely be a place to look.
Absolutely.
In fact, Rebecca, as Frank said, we recently did a video about HSAs and some of the power that's unlocked through those and the things to know about that. So we'll link to that video in the description of this one so you can find it and get some additional resources as well. It'll also pop up at the end of the video. You should be able to click on it also. Thanks for the question, Rebecca, and thank you, Frank.
Thank you. Thanks, Rebecca.
We'll see everybody next time on the Time Blueprint. Thanks.
Investment advisory services offered through Creative One Wealth, LLC, a registered investment advisor. Oliver Asset Management and Creative One Wealth are unaffiliated entities. Licensed insurance professional. This information is for educational purposes only and should not be construed as advice or a recommendation for your specific circumstances. Investing involves risk, including possible loss of principal. Insurance product guarantees are backed by the financial strength and claims-paying ability of the issuing company. We are not affiliated with any government agency and do not provide tax or legal advice.